New Zealand. Next, don't forget to get my free training underneath, of course. So pound AUD, let's start on it now. And I'll split this into, I'll do the pound New Zealand as well. Pound AUD, much like your pound dollar, has come down and down and down and down. You can draw that really easily with a trend line like this. 1, 2, 3, okay, that was your first high within this downtrend. It's now a downtrend because you've got these further moves, okay? And then you've gone to 3. Okay, so you've got your third push down, and if you go even further back, you could count the risk. But you haven't had a lower low, really. You've got your low here is about in line, okay? This one isn't. So I'd probably focus more on this. But the market clearly is slanting down. It has done since 2015, or about 8 years now. So we know long term the market is moving down, and we had it short here. I'm sure if you follow me, you would have shorted it in line with this. Okay, these were my plans. You can see areas of price action up here, and it was more or less this. The fact we're downtrending that gave us that short bias. So at this point, you can see that candle is thumping right through. It's thumping and thumping and thumping down. And if you go on your weekly, what's happening now is the heavy head of this is smashing into this. And it's just pulling you through it. I would say that's probably not going to hold, just for that reason. Now, the only thing I would refer to is the fact that underneath that low, okay, you really should cast your eyes slightly further across to future areas of price action like this. Okay, that holds a lot of weight for me. But really, if I wanted it long in a much better place, I would look about halfway down the retracement from there to there. The reason why is because you've got key moving averages, tons of price action. And if you look on the nearer term, you're trending up. On the longer term, you're not. Okay, so that I'm referring mainly to this, to there, right? It's a near-term uptrend. So I would say it's likely you may get a bounce at this point. I would much prefer it long there compared to the first level. You may find you could likely enter at 1869, but I am far more interested in, to tell you what, I'll draw you a better arrow. Let's get rid of that. Not the best artist, but I do trade a lot. So anyhow, it's about here. You can see this nice mixture of moving averages tells you you've got an average price within the price movement, and therefore this would be far more applicable for those long entries. Okay, right here. And like I said, it comes in line with all these key elements. You would expect your stock oscillator will slowly drift, you'll get oversold, and you'll just come off the back of that. So if you shorted that, well done. I'd be out of those shorts now because you're coming to early support. That level is far more applicable for your long entries. Okay, so that's where I would look to enter long on your pound order. Comes about 182, just shy of 183. So I'm going to do your pound New Zealand now because it falls slightly hand in hand. You can see it looks quite similar in terms of the arrangement of price. Again, if you follow me, you would have shorted it there in line with this. You know, it comes back to what we were just saying on the pound dollar. You come to these levels, these key areas. What happens? Well, you push away. Is it a coincidence? No. Okay, why isn't it a coincidence? Well, it's because it's happened already. And it also actually happened there. Look what happens at these points. Wham, comes right down. Boom, again. What would you expect? Okay, so just be wary of that. Markets repeat themselves for a reason. It's because of market value. Okay, that's what I will say. And the reason why, like I said, it's not rocket science. When people say history repeats itself in the markets, all they're saying is people have preferred places to buy and sell. That's it. Okay, so this was, where are we? This was an area of high market value if you were selling because the price is high. Naturally, therefore, you would be inclined to get short. Okay, and it's gone sideways for such a long time that you can prove it to yourself. I mean, look where the price falls and where it gets long. Why would you not sell it nearer that line, okay, and buy it nearer that one? Why not? You know, you really do have to ask. Um, but the probability for shorts lies in the upside, clearly, and the probability for longs lies in the downside. So therefore, the further you get probably under this low and back to those key moving averages is going to have a far higher probability of success than if you were to buy early within this strong down moving candle. Okay. That comes again at a very average price, which is what we're looking for. That mixture of MAs really helps. It's never the fact you're bumping into MAs and somehow the MAs hit it like a ping pong bat away. That's not what we're looking for. Okay. What we're looking to do simply is just be in line with the fact that they're telling the MAs are telling us what is an average price. That's the point. All we want to know is where the price is average, because that's a good time to buy rather than above average. If the price is above average, why would you buy? Okay, people don't get that for some reason, but it's so simple. Stochastic oscillator, I would expect to drip. By the way, if you haven't liked this already, go ahead and press the like button, please. If you can, it helps a lot, brings the video up a lot more, and don't forget to get my free training underneath. So my bias really for your pound New Zealand, pound order like is long down here, further longs down there with DCA entries, okay? And then I would much prefer it to the short side if you can get up here, okay? So you would need to bounce now for that to happen or later. It doesn't really matter when it happens, but you can see this candle that's stripping at the moment is so strong. You don't have strength there. I would let it hold off. If it does turn out that you just come back up here, I would like it short again, because I'm trying to get to the point where I fall down in line with what I've seen already. Okay, I've seen it happen before. The probability is therefore there. The market value is there, and I would rather be long lower. You can see you've already tried this level. It's bounced once, and often you find in a market, if it's falling, it will bounce at those levels before it gets under those levels, and the weight of that level loses value every time you go to it. Because eventually you come under it via higher time frames. So I hope that helps on your pound or pound New Zealand. Don't forget to get my free training underneath. Like, share, comment, and subscribe.